Hi, everybody. On popular request, I'd like to explain our crypto cycle monitor, which we developed in-house with our index data. As you might know, crypto shows a strong cyclicality around the halving macro cycle, but also the election cycles. And as we are in an election year, we thought it makes sense to plot crypto, our different indexes, Bitcoin, during the post-election year. So what do you see here? When we start with Bitcoin, you see we plot the ROI multiplier against the different election years, starting from November 1st to the following year. Yeah, so we have 2012, 16, 20, and the current cycle, which is orange here. In addition to that, we created a simulation. So what is that? That's basically the mean return of these cycles. And we adjust for a scaling factor. As you can see, every cycle, due to the law of diminishing returns, is lower than the prior one. We account for this relative difference here so that we land around a specific target. For example, last time we had a multiple of 3.4 since November 1st of 2020. And this time we expect a multiple of 2.3. So we adjust the mean return, the log returns, the daily log returns with the scaling factor to still have the seasonality of the mean return, but overall have a lower total return, which is suitable for this current cycle. Interestingly, 2.3 means that we land at the end of 2025 around 150, 160K with an overshoot of around 200, 220, which is, if you read the current research, is a realistic assumption. So now in the current cycle, you can say, if you compare that with our simulation, that the current cycle is left translated, maybe due to the Trump hopium and the talk of the strategic Bitcoin reserve. But what you can also see is that we are right on track for the 2020 cycle, for example, which is interesting. Now, we also did that for the drawdowns. And here comes the interesting part. If you take a simulation and compare the current cycle, you see that Bitcoin, in terms of drawdowns, is doing much better. So normally we would have seen drawdowns around the 10% mark. Now we are much lower, maybe also due to the Trump effect again. But what is interesting is that you see some seasonality. For example, around the inauguration date, you see the first larger drawdown of 20%. Also, you see, maybe due to the US tax season around March, April, the next drawdown, followed by a larger sell-off during the summer months before the next leg up. Yeah, interestingly, you had that in 2020. 2016 was a little bit better, surprisingly. 2012 was much more violent, but you see overall these seasonal patterns, especially around the summer months. You have to be careful. Now, you can do the same exercise for Ethereum. If you look at the ROI multiples first, you see that Ethereum is tracking beautifully the 2020 cycle. And in terms of drawdowns, is also doing much better than what it should do so far. Also, the large sell-off phase is normally in the June period. If you look at the 2020, 2016 cycle, again, you have to be careful around January, March, and during the summer months. It gets interesting for the altcoin market, which is here our small cap index, digital asset small cap index. So that's the bottom half of our top 100 index, to be precise. So you saw that Bitcoin and Ethereum did much better so far in this cycle in 2024. Altcoins are beautifully on track. So we had the first dip of around 20%. We expect a second dip. And again, the seasonal pattern I explained to you for Bitcoin and Ethereum also holds true for the altcoin market. It's not a surprise because Bitcoin is normally a leading coin for the altcoin market. The altcoins have just a higher beta, so that's not a surprise. Also, when it comes to the ROI multiple, we see that we are overperforming the other two cycles so far, which is interesting because most of us wouldn't necessarily say that we have a super altcoin season now. Everybody's waiting for that. But you see that this season might come. Generally speaking, I would say that I won't use or wouldn't use the cycle monitor for predictions. It just provides us perspective where we are in the cycle, if we are above or below trend, so to say. I am much more focused on the drawdowns here, to manage risk accordingly. Yeah, feel free to reach out to me if you have any questions. More to come. If you have any idea for other indexes which might be interesting, then let me know. Keep in mind we need a long time series here, and I hope you found that interesting, and more to come. Thank you.